Hello and welcome to another daily market update by Market Intel. Today we want to talk a little bit about our gold chart, and we are here on the Market Intel website. Make sure that you follow the link that you can find in the description to dailymarketupdate.com. Here you can register and find a lot of Elliott-Wave updates for free on a daily basis. So let's navigate this. First of all, when you get to the website, here you can click on View Daily Market Updates, and then you see here all the asset classes that we cover. Cryptocurrencies, US Titans, oil, gold, Nasdaq, S&P 500 are currently included for free. So what we do today, we take a look at gold. And here you can see, first of all, our written analysis. And this includes the gold 4-hour chart, the gold daily chart, and GLD. Today we take a look at gold. Let's start on the daily chart. Then we navigate to the 4-hour chart. So we click on it. You can see the description. Let's hide it for now. So we click on these arrows, and here you can see the gold chart on the daily. Here you can see that, our assumption is that gold has been for a very long time now in this sideways correction. You can see that this correction started years ago at this third wave top at $2,089. Then we've seen these corrective structures, an A wave to the downside, a B wave correction, then a C wave down that formed a larger A wave. And then we are currently in this complex WXY correction that in our primary scenario is not yet finished. Overall, you can see that it's forming a larger flat structure in which the A wave is a 3-wave move. The B wave is as well a 3-wave move, and the C wave will be a 5-wave move. This ABC structure will complete a 4th wave of a very large degree and should finish somewhere in the region above 1377. We will be able to calculate that precisely once the B wave has formed the top. At the moment, it's difficult to calculate it because it would still move the target area, because in our primary scenario, the B wave has not topped yet. However, we shouldn't be far off, and it seems like the market is navigating in the late stages of this Y wave, which is a corrective wave itself within this B wave correction. A lot of up and down movement, very choppy, and the market is currently just below the 2089 resistance level, this third wave top that was formed years ago. However, in our primary scenario, it's expected that this B wave will overshoot slightly, so the Y wave is probably still ongoing. In an alternative scenario, the B wave has already topped, but for that we don't have enough evidence at this stage. So now let's navigate to the smaller time frame, and what we can do, you just click on close, and now we go to the 4-hour chart. You can see the written update again, so let's close it, the text for now. And this is our 4-hour perspective on the gold chart. You see here this X wave low within the B wave that we just discussed on the daily time frame. And from here, that was the October low last year, the market started to move up again in a WXY structure. You see a lot of overlapping corrective price action, very, very ambiguous price action as well. That's often an indication of corrective price action. So it's not an impulse to the upside. And in the primary scenario, as you can see, with 60% probability, we see the market move higher to complete the Y wave in the larger Y wave, in the B wave very soon. But it can take a while. Corrections in the metals market always take a long time and are very, very frustrating. Now, in an alternative scenario, as you can see, and as I already mentioned, the B wave topped already, and the price should soon move below our support area at 1935, the previous X wave low. Should that happen, and we see that happen with a 40% probability at the moment, then the alternative will be activated, which means that yes, we are short-term bullish on gold, but with also quite a high probability we already see the top in place. And even if there is another high, which is currently expected, it should really only be a marginally higher high to complete this corrective structure in wave B before the market then finishes this correction. And for that, let's go back to the daily chart again. Here you can see this C wave to the downside that should take quite some time. I mean, disregard the timeline. It's very difficult to say how long these movements take. But if you consider the chart and if you see how long the A wave lasted or took and how long the B wave took. The C wave might not take that long, but it should still take a considerable amount of time before this overall wave 4 correction is complete. And it should be well above 1377 based on what we can see now. We will be able, as I said, to calculate the C wave target once the B wave has topped, because a C wave and an A wave, they often have a certain relationship, a Fibonacci relationship. And the C wave, for example, oftentimes has the same length like an A wave or is a little bit longer. So we need that B wave top in place to be able to put a target area for the C wave onto the chart. Yeah, that's my gold update. So make sure that you follow the link in the video description to dailymarketupdate.com to get these updates on a daily basis for free. Thank you very much. Bye-bye.